Welcome to today's More Report Charter Appraisals on Tuesday the 16th of May with me, Rich Perry, market analyst at Asset Markets. Lots to get on to today, but the markets are sort of relatively neutral really on the equities, a little bit mixed, a little bit higher on the FTSE, a little bit lower on the DAX and the CAC. FTSE continues to outperform as the oil price has rallied, and FTSE is now trading at all-time highs. But the sort of big story is really coming through the Forex markets really, with the dollar sort of weaker across the board really. And that's happening even though you've got treasury yields which are moving sideways. But you look at here, you've got the dollar index which is breaking down, and that's come with the euro that's breaking out to sort of multi-month highs. It's looking pretty strong. That dollar index seems to be sort of breaking that long-term uptrend, isn't it? That long-term uptrend that has been in place since 2014, and that seems to be breaking down now. So big strong move there on the dollar today. Let me show you the oil price. Oil price which continues to move higher, and that is, as I said, helping the sterling. Helping the FTSE 100. In terms of sterling's had a boost again today, and that has come on the back of the UK inflation data, which has come in ahead of expectations across both headline and core. 2.7% on the headline. That's way up from 2.3% that we had in the last couple of months, and ahead of the expectations. But also on the core data, 2.4%. That is the highest since, wow, the beginning of 2013. That was again well ahead of the estimates of 2.2%. So sterling has had a boost off the back of that, and the inflationary forces coming through the UK economy following on from the sterling weakness and Brexit and all sorts are sort of mounting up, and that sort of spells a few problems for the Bank of England. It'll be interesting to see how sterling continues to react, but certainly higher today. Not a massive amount, it spiked higher early, but I will take you through the analysis of that chart in a bit. We've also got Eurozone growth data. Let me show you. Here we see the UK inflation data that's just come out, and then you've got the Eurozone growth data, 0.5% on the quarter. For Q1 flash data. That's possibly going to be beaten actually. You've seen the PMIs which have been positive for the last few months really, and certainly you could even see that being broken, or upside surprise I should say. You've also got the German economic sentiment, ZEW, that's at 10 o'clock, and that has also got positive correlation to German growth, so a beat of that estimate would come in to help support the euro as well. So both those datas this afternoon. Now we've also got the US building permits and housing starts, basically around about the same as where we've seen in the last month. But then you're looking at the industrial production numbers at 215. 0.4%, mildly lower, but capacity utilisation mildly up from last month, 76.3, so that would be relatively positive for the dollar. But yes, considering the Empire State Manufacturing data that came in disappointingly yesterday, it'll be interesting to see how that industrial production holds up. Now, my chart of the day is dollar CAD. Now the dollar has been weakening, as I said, and dollar CAD has been sort of forming this little top pattern. It broke down yesterday. Intraday, it sort of hit that 136 level. Now 136 was that old big ceiling. Look at those two key levels, November, December. Hit that pretty much to the pip and bounced. And again, it's hit that very close today, and bounced. 136.04 was today's low. But it certainly seems as though that the market is rolling over, looking more corrective. Look at these momentum indicators crossing negatively. A bear cross on the MACD lines. Saw that back in March with a subsequent corrective slide. The stochastics also are falling in bearish sequence. RSI falling back from 60. It's all sort of points towards a topping process. Now I think you could see a corrective just slip back into sort of the belly of this uptrend channel. Now basically dollar CAD's been in this uptrend channel for a while, but that breakout above 136 was a key move, but it certainly looks as though the market's just topped out near term. You could see a move back towards the supports within this, or 134.50 area up towards 135.35 seems to be sort of a bit of a possibility of a target zone, considering you've sort of broken below that. You could measure a little downside target, 37.70 down to 36.40. What's that? 230 ticks, and that gives you 34.10 area, which, as I said, is not a million miles off that sort of reaction, that sort of overhead, that old support that got left from the breakout. So I think that a corrective move could easily be seen now. Certainly if you started to trade below 136 figure, I think that would signal that correction is underway. So watch out for that. Now you've got this hourly chart where you can see that the market has certainly rolled over, formed this top pattern. It's now finding some resistance around that 36.40 area and putting pressure on the 136 figure level. So as I said, below 136 figure, I think you're looking far more corrective. Now you've got momentum indicators negatively configured now, so just basically just unwinding really these recent moves and helping to renew the downside potential. So you've got a pretty decent sell zone really between 136.40 up towards 136.80, I would say. Put the crosshair there, sort of sequence of lows, overhead supply. So between 136.40 and 136.80 is a pretty decent sell zone really, I think, on dollar CAD. So I wish you good luck in your trading today, and I will speak to you later. Thank you.